Good everyone. Today, I just want to share one of my experience. I went to Motijil, that is called Shapla Chatur. There, I could see many high-rises buildings and many banks. You know that Motijil is the heart of Bangladesh and heart of Bangladesh economy. So I went there and saw many large banks, many investment organizations, many institutions, many things. So who are rolling money to the market. So what I could thought of that in many of my relatives, my friends, educated people, engineers, investors, they could not get some investing firms or banks who could lend them money. So who thought that their arrangements might hamper the financing and investing. So how could they grow up? My friends and family members, I want to share that point, that how could they have been a successful business companies, successful operators and everything. Here the term comes venture capital market. So what is VC? If we present it VC as when some people have some ideas but they don't have much facilitates the facilities of money providing, then they go to bank, they go to large investing firms. So what happens, the bank fears of that their money may be gone down and there may not be that much series to be paid by. So venture capitals comes here to give emphasize that it can be a very good outcome since it's a really challenging and many people really don't want to take challenge. So when some people having some ideas in that part, that venture capital comes in. Venture capital is part of investing some big institutions. It can be private investing, it can be a multiple organizational investments, and it can be corporation investment and so on. So when someone having some ideas, they want to have started up something and they need some further money to start and grow up their business. But what happens? They cannot. That time when these people come into the business, they hear those people's thought, they understand what is their intentions, and they invest their money. And they are visionary people, visionary organization, visionary investment organizations, and they have a keen visions, and they have set up their backs so that there is no very less amount of loss even though. And in the initial level, the main part is seed funding. Seed funding is the main portion where they use their technologies, their thoughts, and they run the business. Then the point comes step one, which we can refer as the ideas have been very well accepted by the consumers, suppliers, and the market. Then comes this part two, step two, that is company is growing furthermore very fast and getting their reputation highly, and on that view the market demands goes up. And then eventually then comes the step 5. Step 5 refers to that the market is growing and the products are highly appreciated and it's been attracted by much, and the revenue has gone very up, and it's continuing for suppose for 5 years and on and on. So after that, when the company has grown furthermore, then the company thoughts of that there can be a IPO, and then there comes the main profit of this business. They sell the share, and there is the main investment is coming down outside, and profit is making flourishing for high enough. And then the venture capital owner is really highly appreciated by the terms of their investment return, and their profit is high margin. So in a sense, yes, venture capital is a highly challenging thing, and there is danger of risk as well, but it can grow upward than any normal investment as well. So this is really a good enough a tool to emphasize in this market and this investment and this whatever sociological aspects and economical aspect we can say. This is really a excellent perspective to hang up and boom up a business source. Thank you very much. Thanks.
Hello, I'm Claudia Archona. So today I'm going to talk about the venture capital. So this is my presentation topic. So let's start. So first of all, I like to talk about what is actually venture capital. So venture capital is a form of private equity and a type of financing that investors provide to startup companies and small businesses that are believed to have long-term growth potential. So venture capital generally comes from well-off investors, then investment banks, and any growth of any other financial institutions, basically. So, however, it does not always take a monetary form. It can also be provided in the form of technical or managerial expertise. Venture capital is typically allocated to small companies with exceptional growth potential, or to companies to have growth quickly and appear poised to continue to expand. So, this is actually the basic form of venture capital, which is actually so. Let's see what is the key takeaways about venture capital. So, in venture capital deal, large ownership chunks of a company are created and sold to a few investors through independent limited partnerships that are established by venture capital firms. So sometimes these partnerships consist of a pool of several similar enterprise. Venture capital is also a way in which the private and public sectors can construct an institution that systematically creates business networks for new firms and industries so that they can progress and develop. So let's talk about some key takeaways. I found two key takeaways about venture capital. One is venture capital financing is funding provided to companies and entrepreneurs. Uh, in it can be provided at different stages of their evolution. And second one is it has evolved from a niche activity that the end of the Second World War into a sophisticated industry with multiple players that play an important role in supreme innovation, basically. So let's see some. Let's talk about some features of capital investment. So, I found some key points about these features. So, I'm gonna give some point, um, highlighted some points about venture capital investments, like where venture capital basically invest and all. So, first one is high risk, then lack of liquidity, long-term horizon, equity participation and capital gains. Venture capitals invest are made in innovative projects, basically. Then suppliers of venture capital participate in the management of the company. So these are some actually features of venture capital, and then some methods of venture financing capital is equity, participating debentures, conditional loan, and all. So basically, venture capital funding process is typically involves four phases in the company's development. So one is idea generation, second startup, third ramp up, and fourth is exit. So these are the actually